So, hi everybody. Thank you for joining us today. I'm Emma Norledge. I'm the Deputy CEO of Wave Community Bank. And here with us today, we've got Claudine Bell from the Money and Pension Service, and my colleague Helen from Wave, who is going to moderate questions. So if you have questions as we talk, please put them in the Q&A and we'll get to them at the end. And we're recording this so we can share this as well on our website. So I'm going to pass over to Claudine. You can share your screen now, and then we can crack on.
Brilliant. Thank you so much, Emma. And as Emma mentioned, my name is Claudine and I'm the South East Regional Partnership Manager from the Money and Pension Service. Today I'm going to be speaking about financial wellbeing and the importance of financial wellbeing and the resources that we have developed to support financial wellbeing. So here we are. Right, so you might be thinking, what is MAPS? Who are MAPS? Well, MAPS stands for the Money and Pension Service. We're an arm's length body of the government, sponsored by the Department for Work and Pensions, and we have a commitment to ensuring that people throughout the UK have guidance and access to the information that they need to make good financial decisions over their lifetime. We are independent, impartial, and our service is free. And we like to highlight this so that people can feel confident that our resources are trustworthy. So what do we do? So we're here to ensure that everyone feels more in control of their finances throughout their lives, from pocket money to pensions. Because when people do, communities are healthier, businesses are more prosperous, and the economy benefits, and individuals feel better off as well. So our ambition is that everyone sees financial wellbeing as a national mission and a core UK value. So what exactly is financial wellbeing? So at MAPS, we have an official definition, and we believe financial wellbeing is about feeling secure and in control, about making the most of your money day to day, dealing with the unexpected, and being on track for a healthy financial future. So in short, it's about feeling financially resilient, confident, and empowered. Now, we know that there is an enormous interdependency between mental and financial well-being. So it's a chicken and egg situation. If your mental well-being is suffering, it can affect the way you deal with money. And if you're feeling low or depressed, you may lack the motivation to deal with your finances, and you can avoid doing things to stay on top of your money, like opening bills. Like opening bills or checking your bank account. If your mental health is suffering, you may also make impulsive financial decisions, such as maybe spending more to make yourself feel better. So I don't need to tell you that the cost of living is having an impact on absolutely everybody at the moment. According to a 2020 survey, many employees are saying that they're struggling to reach payday. And contrary to what you might think, higher paid employees are impacted too. A recent study found that many people are struggling to maintain a decent standard living on household incomes as high as £60,000. 36% of employees say that sometimes they often struggle to pay off credit cards. 45% of employees say they run out of money between paychecks. And 1 in 4 people would be unable to cover their regular expenses for more than a month if they lost their income. Therefore, it's key that employers support their employees further, especially during these times of a significant increase in the cost of living. So the case for financial wellbeing in the workplace is clear. 6 out of 10 employees consider financial well-being to be the responsibility of their employer. And employers have started to recognise how important financial well-being truly is, with around 50% of employers saying that they have a financial well-being strategy in place, but only half of these employers are confident that it is well developed. And while there has been a slight improvement in the ownership employers feel about offering their employees support on financial well-being, there's still a lack of confidence with their capability. And at the Money and Pension Service, we've developed resources to support you in this area. So we've developed an employer's guide to financial well-being. that details 7 simple steps to support your workforce and can form the basis of any financial wellbeing strategy. We won't run through all of them, but just really quickly, they are: you can use good signposting in education to help build confidence and resilience. You should know what's worrying your employees and encourage them to talk about money. You can assess what you already offer. You can design your financial wellbeing approach. You should target key moments and make support available in those moments. Decide if you need to use external providers, and don't forget to test and learn. So I've put a link on the slide where you can access the Employer's Guide to Financial Wellbeing, and it is on the Money and Pension Service website. And as mentioned before, it's a great basis to form any financial wellbeing strategy. So point 1 on the Employer's Guide to Financial Wellbeing is to know what's worrying your employees. And one way this could be achieved is by running polls or surveys or questionnaires. So we've recently released a financial fitness tool with a set of 9 focused questions that individuals can use to quantify their level of financial well-being in an efficient and effective way. So these 9 questions encapsulate the key outcomes of financial well-being. So that's feeling confident, being resilient and empowered. They also cover the key enablers behaviours that are shown to positively impact financial well-being, in particular savings, credit use and retirement planning. So we know that sometimes employers tend to shy away from the topic of financial well-being, fearing that employees will simply want a pay rise that they'll be unable to deliver. Well, financial well-being simply isn't about having more money. It's about knowing how to make the most of your money and knowing where to turn if you have any problems or have any questions. So a great place that you can signpost people to if they do need free, impartial, unbiased support, information and guidance is Money Helper. So we are the Money and Pension Service, but our customer-facing website is Money Helper. And here you'll be able to access free money guidance, information, free tools. It's a great, safe place to signpost your employees. Many employers link Money Helper on their internal websites, and they can feel confident that it's a government-backed service, regularly updated, where people can get that information and guidance. Money Helper also has a range of tools and calculators that you can signpost to employees, or you can even embed them into your internal websites. For example, we have a budget planner, a benefits calculator, a debt advice locator tool, and even a divorce and money calculator. Some employers have taken our embed codes and actually have these calculators on their website, and they periodically signpost their employees to help them make the most of their money. The great thing about Money Helper is it's not just a website. People can call if they want any money guidance. And this is great if there are any maybe literacy issues, if somebody can't find the information that they're looking for, or they just need somebody to talk through their situation with. Not a lot of people know that you can call for free money guidance. So this is another section of the website that you can promote on your internal website to your employees. We also have a range of cost of living guides, and we've actually encapsulated this in a marketing pack. So if you have any cost of living pages on your internal websites, you can take our content and populate that. These guides are available in video format, so there's 4-minute videos, and some employers release these guides periodically to always be able to keep that conversation of money going. So at MAPS, we are the single largest funder of free debt advice in the UK. And our research shows, unsurprisingly, that the need for debt advice is on the rise, even for individuals on what would be considered a relatively high income of over £40,000. And the increase for debt advice has led to many local citizens' advice services becoming overwhelmed. So to address this, we've created the Money Advisor Network. And what this does is it offers people a single point of entry to a panel of telephone debt advisors who are able to offer a call back within as little as 30 seconds. So we have posters with a QR code that you can display on your website. Some employers have printed this off and popped these on the back of toilet doors to encourage people into debt advice. It takes people on average 1 to 2 years to admit they have a problem with debt. So we really need to normalise the conversation, encourage people to seek help as early as possible. In those 1 to 2 years, their mental health is suffering, they're becoming stressed and depressed, and their ability to work could be affected. The great thing about the Money Advisor Network is that the debt advice is free and totally confidential. So as an employer, you won't need to know, you will not be notified that they've accessed that. And that can be a great way to off your employees' minds to know that they're able to access this service without, somebody being alerted about their individual situation. So moving on then, one of the best ways to increase financial resilience and help people cope with any financial shocks that may arise are through savings. Savings are extremely important. And as an employer, you may wish to introduce or promote payroll savings. So payroll savings means making regular savings direct from an employee's pay. An employer deducts the amount of the employee wishes to save directly from wages or payroll. So similar to pension savings, the automated set and forget nature of the process makes it easy for people to save by making it habitual and effortless. So 2 Cushion surveys in 2020 showed that 72% of employees surveys wanted access to a workplace savings schemes, and 92% of employers would implement a workplace savings schemes. So it looks like employers want it, employees want it, and employers are happy to offer it. So it's fantastic. So I'm going to leave Emma to explain a little bit more about how Wave Community Bank can help with payroll savings. Just to note, we are the Money and Pension Service, and that means that we also offer free pension guidance. We know that sometimes employees have a lot of complicated pension queries, and you can promote our free telephone number for pension guidance. If any of your employees are over 50, with a defined contribution pension, so that's a pension from the private sector, they can have a free pension-wise appointment, which is a more in-depth structured pension appointment. And we also have dedicated helplines for divorce and pensions, and pension safeguarding appointments where people might be transferring money between pensions, and dedicated scam appointments if the worst were to happen as well. So lastly, we would just encourage you to take part in Talk Money Week. This is our national campaign that happens every year, and many of the big banks and supermarkets get involved. And it just encourages people to talk about money. Money is still quite a taboo subject. But when people don't talk about money, they can make risky and impulsive financial decisions. And many employers tend to run events around Talk Money Week, such as cost of living fairs, for example. And we have lots of free resources on our website to help you talk about money and take part. So in summary then, create a financial wellbeing strategy. Use our free Money Helper resources, our cost of living marketing pack. We have printed guides. You can promote debt advice and encourage an open environment to talk about money. And then I've also popped some links where you can find out a bit more information about why financial wellbeing is important to employers. So thank you very much for your time. And I'd now like to pass over to Emma to begin her presentation. Thank you.
Thanks, Claudine. Seem to have lost my video, so it's all going enormously well today, isn't it? Okay. Let me share my screen. Can you see that okay? Yeah, lovely.
Yep, that's come up.
Thank you. So you can partner with a credit union to look at your payroll deduction savings scheme. So I just wanted to tell you a bit more about what we do and how payroll schemes work. So by offering this service to your staff, you are giving them the option to both save and repay loans straight from their wages. This helps promote a savings habit, which, as Claudine said, the set and forget idea is exactly how it works, because it comes out of people's salary on the day they get paid. They don't think about it so much. And I've had members say to us, "Oh, I had no idea quite how much I'd saved." And it's often a pleasant surprise when they come to actually needing those savings to help with something. You know that if you are using a credit union, we're a regulated financial institution. So we have the PRA and the FCA keeping an eye on us. So you know that their money is going to be safe if they're saving, because we have the Financial Services Compensation Scheme to protect their money up to £85,000. And we're a regulated lender, so we're watched to see how we're lending, if it's affordable to our members, and we're making the right decisions. Payroll deduction is also a great opportunity to introduce young workers to a credit union. I was at a conference a couple of years ago where I was saying young people's first experiences of credit are not loans, overdrafts, or credit cards. It's more likely to be a buy now, pay later type product, or a payday lending type product. So really, we want to encourage younger people to engage with financial institutions like us. So young workers are a real target through this kind of scheme. And research has proven that these schemes really do make a difference. I've got some figures on the next slide, I think. So partnering with a financial service, you have options. There are credit unions, and we are ethical, not-for-profit, savings and loans cooperatives. We are a community credit union that also has payroll. There's other types of credit unions that just run payroll with different industry sectors. And then there's other providers that are generally fintechs. It's online only, and these are for-profit organisations. So when you're considering who you might like to partner with, think about what's right for you and your business, or your public sector institution. What makes the sense for you to partner with, and how is that likely to appeal to your team? I sort of say this because we've got NHS trusts that a lot of the NHS staff really love the work that we do in the community to support people, particularly with the financial wellbeing and the mental health. We have local councils that are partners with us, and they love our community work too. So think about your team and what will appeal to them. So Wave Community Bank is a credit union. We are based in Hove. Our common bond covers anyone who lives or works in Brighton, East Sussex, Kent and Medway, and we also have Unite members in the South East region. We're pushing close to 15,000 members now. Our workplace savings scheme is called Chorus, and we wanted to give it a brand so people could understand exactly what it was, that it's a payroll scheme. We also have a very strong financial mission behind the credit union to fight financial exclusion, and we do lots of work to assist charities. We work with the Stop Loan Sharks campaign. We work with the third sector to get people into the credit union so they can access accounts. So there's all sorts of work that goes on behind the savings and loans. So these are the stats I referred to earlier. That's from a deduction lending piece of research that was funded by Fairfield Finance. These figures show that there are really high satisfaction levels for people that use payroll deduction with a credit union. And I would say a lot of high street banks would give their right arm for these kinds of numbers. I think particularly what's interesting along the financial wellbeing piece is the 60% feel less stressed, anxious and depressed. And Claudine showed the cycle of mental health and financial wellbeing, and how actually, if you can get it right with your finances, that can really improve your mental health. But also the fact that borrowers are very satisfied with their loan. Only 5% said they didn't feel like that, which is an amazing figure. So Chorus is a scheme that allows people to save and repay their wages repay their loans straight through their wages. It's free for our employers. Anyone can join and set up a regular savings. It's all done online pretty much nowadays. If you have somebody that wants support with paper forms, that's fine. We can do that too, but the vast majority of people join us now online. They can set up regular savings through their wages by completing a payroll deduction mandate. They can do that when they join. It's as part of the membership application process. You can say, I work for Brighton and Hove City Council and I want to save £20 a month. And you can do that on the day you join. Joining us, or you can do it again later if you want to, if you haven't made up your mind on the day that you join. Joining us costs you £5 one-off membership fee, and then you've got to deposit £1 to open your savings account. So a lot of people want to save, and they'll sort of say to themselves, oh, I'll see what I've got at the end of the month and then I'll save it. And generally the answer is you don't have anything left at the end of the month. So saving on the day you get paid as the first thing you do, it means you're kind of paying yourself the day you get paid, and you're less likely to spend it if you put it away in an account like a credit union account that perhaps is away from your day-to-day banking, because then you're not thinking about it and you're more likely to build your savings that way. We don't offer a fixed interest rate on our adult accounts, which is what payroll is. Because we're a cooperative, depending on our profit at the end of the year, we'll pay a dividend. It's, as I said, it's easy to set up online, or you can download our app and join and start saving that way. We have 3 kinds of savings accounts. We have our basic share account, which everyone has a share 1 account. You can have up to 4 share accounts, so share accounts 1, 2, 3 and 4, which you can use to divide up your savings for whatever reason. If you have a loan with us, your share 1 account will be held as collateral against your loan, but I'll talk about that a bit more in a minute when I talk about loans. We have a prize saver account where for every £1 you save into that, up to the first £200, you'll get an entry into a free prize draw. The headline prize is £5,000, and there's 10 prizes of £50, 10 prizes of £20. You're not gambling your money. So if you have somebody who never ever saves and might put a tenner on the lottery a week, say, tell them to put that into a prize saver account, because they're going to keep their money and they might win some money. You're not going to lose anything, and you might win something with prize saver. WaveSave is an online account that we have that's on our app and our online banking. You can set that up with up to 10 savings goals. So that might be Christmas, birthday, holiday, you name it. And you can then set how much you want to save and when you want to save it by, and the account will say to you, okay, if you want to save £600 by Christmas, you need to save £50 a month or something like that. So you can set up whatever savings goals you want. For our loans, it's easy to repay it straight through your savings, so it's through your wages, so you're never actually going to miss a payment if you do that, which is really good for maintaining and building credit scores. We issue these loans at a lower interest rate, so to people that are repaying through payroll, because the risk is lower to us. So generally payroll borrowers get a better interest rate. You'll know that your staff will be borrowing from an affordable regulated lender. So if you have concerns that perhaps your lower paid workers might be using payday lending type products or even the illegal money lenders, it's really good to have an option to be able to send them to the credit union. Our loans through payroll, we have a higher acceptance rate for. So it's pretty much double what our standard acceptance rate is for loans. And with all our loans, excuse me, you save as you borrow. So every loan repayment has a savings element to it. So people will build up their savings in their share 1 account, which is held as collateral against their loan. And when you've got parity between the loan balance and the savings account in share 1, you can use that to pay off your loan, and there's no penalties for doing that. Alternatively, you can just keep going. And a lot of people that borrow from us have a savings pot for the first time when they finish their loan. Excuse me. So we have a lot of financial wellbeing support available on our website. Claudine's already told you quite a lot about the Money Helper content, which we do have on our website. We also have a free benefits calculator, so people can just put in their situation, how much they earn, their children, dependents, whatever, and then it will tell them what it thinks they should be getting in benefits. It can help people maximise their income. We also do webinars regularly on subjects like tackling debt, improving your credit scores, surviving the cost of living crisis. We've had employers come to us and say, could you do a specific session on a specific subject? Yes, absolutely. Talk to us about it and we'll work something out. And we also have our Wave Money Guide, which is available on our website, which has a budgeting sheet in it, so you can work out what your budget is and look at how you can improve it. It also has sort of little hints and tips and quizzes on your attitudes towards money. So there's all sorts of interesting stuff on there. And we regularly post blogs and articles on how to save money at different times of year. In the summer, we were offering help on how to save money through the school holidays, all that kind of thing. So it's worth keeping an eye on our website and our social media to access that. We have member benefits as well. The best ones are certainly the bus ticket discounts. If you use Brighton and Hove buses, you can get 20% off an annual ticket for adults, 10% off the children's tickets. Arriva bus tickets in Kent, you can save up to 20% on. We also have 15% off Freedom Leisure annual membership across Brighton and Hove and East Sussex. The thing to remember with a community credit union like ours is that we go out and work in the community. We have a lot of outreach. We have a network with all the third sector agencies. We are really there to help, so people can come to us and say, you know, we need some help with our money. And you can see from the photographs, we did a Stop Loan Sharks tour of the Pride events a couple of years ago. So we really are about getting involved in our community and helping our members make the most of their money. This is just an example of a case study of a member that came to us. She was paying debts that were costing her £450 a month. She had a loan and a credit card. With the credit union, she could debt consolidate it, and she was saving. She was paying £144 on her loan repayment and was saving £30 a month into her savings account. So ultimately, by the end, she'd have £1,200 in her savings account, and she would have seriously freed up some disposable income in the month, sort of over £300 by switching to a loan with us that was through payroll. This is also a case study of it from the employer's point of view. Martin has now retired from Brighton and Hove buses, but when he was there, he set up with us, and his view on the credit union and the support it can give was really positive. And I think what's quite interesting in what he said was that it's all pay grades, so it's everyone within the business that uses us, from managers to the lower paid workers, and people like using us because of our ethical credentials. And we particularly find, because there's quite a lot of Unite members in the buses, they're a big fan of ours, and they are one of our biggest employer partners for bringing us members who want to use payroll. So just with some regular questions that we get asked, it's completely free to employers. Chorus does not cost you anything. Can any employer sign up? Absolutely. We wouldn't turn anyone away. We want everyone to have this option. We're particularly encouraging charities at the moment to come to us, because a lot of charity workers don't get many staff benefits. Confidentiality. This is a question that members will ask. We don't tell an employer if a payroll deduction is for a saving or a loan. It's not something that they are informed of. It's simply they are told to send a certain amount of money every month to the credit union for you as a member, and that's it. I've been asked about liability for the employer for the loan. The loan agreement is entirely between the member and the credit union. The employer is simply a conduit from getting the money from A to B, and that's it. There's no liability involved. If a member of staff leaves the business, we do ask that you let us know, because then we can get in touch with them to arrange for them to carry on making payments by direct debit or by standing order. So we just ask that we're alerted that a member's left that's been using the payroll scheme. And what is the workload level for employers' staff? So it really is vital that the HR team help promote the scheme. The more engaged HR are with us and help us get the word out there, the more people will use it. And that's been really evident with certain employers where the HR team really work very closely with us. Your payroll department will have to implement the deduction, collect those payments together and send them to us, and then complete the spreadsheet that we've provided so that they can send that to us with the deductions on it they've taken. And that's it. it's not a huge amount of workload for the staff team, and it has a massive benefit to those that work for the company. So I'll say it again, it's free to set up. When it comes to launching the scheme, we'll have a meeting with the HR team and find out what are the best channels of getting information out to your staff, because that varies from employer to employer. So we'll be guided by you on what's the best way to communicate with your staff, but we can provide all sorts of materials, digital, paper, we can do visits, we can do all sorts of things. So we'll work with you on how to get the message out. Our finance team will work with your payroll team so that they completely understand how to take the payments and send them to us. We can do, as I said, whatever channels we can do in person or online stuff. And we very much view this, and we are a cooperative, and we believe in collaborative cooperative working, and that's how we work with our employers. So that's it from me. Have we got any questions, Helen, please?
Let me just stop the recording and I'll have a look.
Thank you.